Hey brothers and sisters alike, my name is Tyler and welcome back to the channel for another very important AMC update video. And yes, of course, we're going to go over the technical levels to be watching for going into the next couple of trading days. We also have to talk about the fact that Ortex is signaling to us that the short interest is going down as the stock is going down. And as you guys do know, we are the majority shareholders, so this is impossible to be going down as fast and as rapidly as we have been going down, unless some of you guys are selling out. So let me know down below in the comment section if you have trimmed, took some profits, if you've completely sold out, or if you are continuing to buy the dip, so we are all on the same page. That is very important. But we are also going to talk about the one leading indicator that is signaling the market is going to crash in the near term future, that is really telling you there is a flee to safety right now. A lot of people want that safety, even if it's a low return, or at least big money, I should say, and that is something we have to talk about on this channel, as well as go over all the other reasonings the stock market is going to crash, but more important than that, how AMC will benefit from a stock market crash. And that is the double-edged sword effect. That is something I talk about in pretty much all of these videos. So that is something very important. We're also going to take a look at the Stocko tracker data as far as the option chain is concerned. So with that being said, make sure to hit that like button if you want to see AMC go straight to the moon, as well as comment down below, like I said, and consider subscribing to the channel. So getting right into this video, guys, let's not waste any time. The first thing that I do want to talk about is the technical levels to be watching for. Now, when it does come to AMC stock, this is something I've been pointing out for quite a while, is that we have a substantial support level at $33 per share. So I want at least AMC to stay above this. I do think, obviously, you're going to have the mother of all short squeezes, so it's really a patience play. But if we can stay above $33, that is definitely a great sign. Under that, you're looking at about $30. So like I said, at the lowest point in the day, we did go to $31.15 per share. We bounced right back up above that. Now we are $1.47 above $33, currently at $34.47. So that is a great sign going into tomorrow and throughout the rest of trading. But as far as potential upside, when we do start to see that momentum kick in, we're gonna have to break out past 40 and then eventually break out past 50. And I think 50 and 55, in between that range, will be solid support levels once we do get to those prices. Now, that's pretty much all I want to say as far as this. The chart doesn't look too good. We're kind of in this bearish downtrend, but that is nothing to really be concerned about if you are in this for the short squeeze, which is still 100% on the table. But now we have to talk about the fact that Ortex is signifying that the short interest has been going down over the past about week or two, and AMC stock has only had 2 green days in 11 trading days. So this, quite frankly, is not possible. Now, I want to give Ortex the grain of salt. Either their calculations are wrong, or they're just not being reported the truthful data. And we do know this has happened in the past before. There's a lot of ways hedge funds, institutions, market makers, brokers, whoever they are, that have these short positions can make it look like they are covering when they are not actually covering. So that is, in my speculative theory, what is going on here and why Ortex is presenting this data the way it is, because our short interest went from about 20% as far back as 7 days ago, now at 14.54%, and AMC has been getting beaten down. And like I said in the beginning of the video, there is no way this is happening unless apes are actually selling out of their positions. There is no way possible. But you could also see this price impact through the dark pool trading, because we are not being reported accurate dark pool volume numbers or any data from the dark pools. That's literally what they're for, is to hide transactions. So there is quite possible the running speculative theory that companies like Citadel are holding orders on their books and essentially selling the stock into the open market, shorting it, naked shorting it into the open market, buying it back on the dark pools where it doesn't affect the price of AMC stock. Now, that is what I think as well. Take that with a grain of salt. That is speculative and nobody is trying to get sued here. So really come to your own conclusions. None of this video is financial advice. I believe I didn't say that in the beginning. None of this financial advice. I'm not your financial advisor, not your financial planner or your dad. So don't listen to anything I say or anything anybody says in YouTube videos. But as far as the Ortex data is concerned, they are estimating there is 74.36 million shares that are currently sold short. Like I said, 14.54% short interest. I do think this number is well over 20%, especially over this last drop that we have recently seen. There is no way shorts have been covering their shares. That is simply not possible in my opinion. So let's move on from this. Let's talk about the biggest indicator that that pretty much all financial media is talking about, that just lets you know that big money is actually looking for safety in investments. Now, we already know China cut the RRR rate as well. That is essentially letting the banks keep less money in the bank so they can do more lending and try to spur growth in the economy. We also see Goldman Sachs that has liquidated 25% of its stocks and equities in fear of a market crash or correction. We're having a ton of analysts coming out and saying expect a 10 to 20% drop in the stock market, but you also have the fact that JP Morgan and other banks are issuing actual margin calls intraday if these hedge funds institutions margin levels do go down too low. But we also have Wells Fargo shuttering all personal lines of credit. That is, I think, the biggest indicator, as well as a lot of the United States stuff. China does have a big impact, but when it does come to America, a lot of investors that care about China because it's the second largest economy, but they really care about the American economy and the American stock market. So the fact you're seeing these banks take all of this action where they just had their stress test and everything seemed to be good, and the Fed basically put them to the test of, if the stock market fell 55%, would you guys be okay? And they all passed relatively easy. So it's quite alarming to see them doing this. But back to the whole 10-year treasury bond situation. And this chart is showing you the yield on the 10-year treasury. So you guys can think about this. The easiest way to think about this is the more people that buy the bonds, the lower the yield does go. And that is telling you that they want this guaranteed money. They want the safety that government bonds do provide. Now, as you guys can see, just look back here in March 2020 when the stock market was crashing. The yield went from almost 2% or close to 2%, a little bit over 2% at times, as far as December 2019. Just 3 months later, we went down to 0.49% at the lowest yield. So you see a lot of people flood into these bonds, which does indicate to you that they are fearful in the overall stock market and want that level of security. And as you guys can see, over the past month or so, we have went down quite a lot, going from about 1.74% yield now at 1.19% yield. That is a huge move in a relatively short amount of time. So I think all the signs are here for a market crash or correction is coming, in my opinion. Now, you always want to take a look at what big money is doing, because when the stock market does crash, you tend to see these indicators like we are seeing now coming up more frequently and being at the focal point of discussions. So now, how does this play into the whole double-edged sword effect though? And it's very simple. Take into account hedgies that have long positions in the stock market but also have short positions in AMC and other stocks for that matter. Now, when the overall long positions start to come down in the stock market, they are losing money on that collateral, much the same way you guys do if you have margin accounts and you are using margin. So that value goes down, whereas a lot of hedge funds institutions, they see this coming, so they will start to cover their riskiest positions, which are going to be their short positions. So they will start to cover. That will be a basically trickle down effect throughout all of these hedge funds and institutions, where it essentially forces them to cover their shorted shares once the stock market does go through a crash or correction. And we are starting to see this. If you guys could not tell today, maybe you haven't looked at your phone or whatever the case was, we were down quite substantially in the overall stock market. Now the futures are open, but you can see this curl down to the downside. Now that the important information is out of the way, we have already went through that, so you guys know that information. Let's take a look at the Stocko tracker data. If we do have a potential for a gamma squeeze, and it doesn't look like that is the case, we have a very low number of calls that are in the money, a lot of calls that are out the money, and unfortunately I make tons of videos talking about how options are bad right now. We are feeding Citadel's pockets, allowing hedge funds, institutions, whoever has short positions, to actually stay in these positions for a longer period of time, because we are buying options that are so far out the money and there is no need for them to do any hedging for these options. But our next most likely situation for a gamma squeeze is going to be August 20th, and then obviously September 17th. 15th. So that is all I do have for this video. Make sure to hit that like button, comment down below, and subscribe to the channel if you want AMC stock to go to the moon, as well as if you guys want to join a great brokerage that sends your orders to lit exchanges, not market makers like Citadel, and ultimately help the AMC short squeeze. By doing so, check out the link for public, no deposit necessary, no need to link a pen count, get up to $70 in your choice free stock in about 3 minutes time. So that is free money. Check that out, as well as if you guys want to be notified every time I make a trade, buy the dip in AMC or whatever other stock, make sure to check out the link for the buy and sell alerts. It's a great community and it pays for itself. But with all that being said, I will see you guys in the next video.